Hello again and welcome. Thank you for watching. This is Robert Schein, Managing Director and Partner of Blanke Schein Wealth Management. Today is Tuesday, the 23rd of February of 2021. Let's get to our headlines of the day, why markets are moving, and we'll explain it. So thanks for watching. So right out of the gate, we had market sell-off on a two-day sell-off, and that continues with a rebound to the close. And one of the reasons for the rebound in intraday trading is simply because our Fed chairman was reporting to the banking committee today, and he basically, Jerome Powell, said that he is in full support. Essentially, it's more important now that the economy has success with the vaccine and that the Federal Reserve is more accommodative, i.e. dovish, and supportive in every capacity. Basically, you can't go too small in terms of stimulus as well as accommodative support from the Federal Reserve. Now, if you think about it, the economy is picking up. Housing starts is all-time high. We're seeing, he basically also said that there's no time to worry about budget deficits. That's the last thing we should be thinking about as it relates to ensuring that we basically have liftoff in the economy. Now, if you watched last week, a couple of times I brought up this chart right here, which is the 10-year Treasury, and it's one of the reasons why the market is leveling off right now. Taking a breather, consolidating. Obviously, growth companies, big tech, has taken a breather the last 3 or 4 trading sessions. And here's why. Is because the 10-year Treasury, as of today's close, the 23rd, is 137. Now, last week, I was here with the same chart saying this is the line that we have to watch in which the market's paying attention to, therefore we should be too. So the fixed income, the bond market, and the market at large is all making certain that we're going to find out what the next move is, either up or down for the 10-year Treasury. This movement right here, our investment committee here earlier today with Blanke Schein Wealth Management had Stephanie Link, our Chief Investment Officer. You see Stephanie several times a week on CNBC. Stephanie spoke to our team here, and we all agreed about the movement in the 10-year Treasury as the last week or so is extremely significant. This movement right here that we saw last week and continuation this week is why markets are volatile, why markets are selling off. Because like anything, markets don't like movement in particular areas in terms of volatility and velocity. They don't like that pickup, if you will. So that sort of spooks markets, so everything has to sort of be in equilibrium. That being said, also internally in the markets, the tides are changing. We've talked about this in great detail about the transition from big tech, or those that led us to all-time highs. Now it kind of has to consolidate. Markets have to consolidate. We're watching energy as the top performing asset class year to date, followed by banks and materials and utilities. All of those industrials, all of those have caught a bid. Those are the value versus growth. There's always that sort of dichotomy of value over growth. The answer is you own both. You own a balanced portfolio. And in fact, you load up on value when it's out of favor. And now as value catches a bid, growth is actually taking a time off and sort of seeing a market rotation within. And that's okay and that's healthy. We like to see that because for markets to go higher, they have to consolidate. Everybody has to be there together. I used the analogy last year, if you watched, my wife and I and the 4 kids, teenagers, we run up the hill and take a hike up a local mountain here in the Coachella Valley called the Bump and Grind. The kids are going to run way ahead of mom and dad, especially me, because they're a lot faster and quicker, right? But they're going to have to wait mid-mountain because they're going to get in trouble by mom and dad if they go all the way up without us. So think of that like big tech. The kids are up there, they have to wait. Now the slow-moving energy sector, financial sector, which would be me. I am always the last, to get my butt up the mountain, but eventually do. We all wait mid-mountain and then we go up again. Guess who leads again? The kids. So we could see this consolidation also have a rotation within, bringing the bottom up, and then also seeing big tech break out again. We saw a lot of the big techs on the moving averages hit their 200-day moving averages and then reverse positively to do today's close. So we'll see if that trend continues. And finally, Dr. Copper. Copper's hitting an all-time high, and why that's important. Copper's a leading indicator in terms of the global economy. So all central banks and all the economists are focused on making certain that the economies are starting to grow again, right? GDP, they're trying to throw all the stimulus and all this additional support to ensure the economy is growing. That's great, but the one indicator you want to make certain is copper. Why? Because it's in our homes, it's in our batteries, let's say for energy car, it's in everything. So, companies need that, industrial performance needs that to get that into the economy, and it's a leading indicator as to if the resurgence and the rebound is real or if it's a facade. And right now, copper is telling us that this global resurgence is real. So everything that the accommodating that the Fed's doing, as well as the stimulus that is out there in the hands of the consumer and more to come, that's helping corporate earnings. And those earnings, again, drive stock prices higher. So that's a recap today. We see a healthy consolidation and market rotation. Watch the 10-year Treasury. I keep having this up there because that's really what's moving the market. So thanks for watching. That's our update for today, and we'll see you again on Thursday.